TLT. If you heard our whisper last Thursday, you knew exactly what to watch for. Welcome to Daily Market Waves, your front row seat to the market's evolving story, where every candle speaks and every wave counts. Today's lineup: is volatility taking a breather? Has the dollar locked in its bottom? TLT and yields: calm, calculated, and candle confirmed. Gold, silver, and natural gas: are they sensing the dollar's next move? S&P 500 and Nasdaq bounce big. But is the rally standing or shaky ground? And today's cherry on the pie: a Tesla deep dive that could jolt your perspective. And a heartfelt thank you to all our recent and loyal subscribers. We are rapidly approaching 10,000. Your support fuels our momentum. Like, comment, and subscribe. And check our investingangles.com for premium insights and free reader articles that keeps your steps ahead of the curve. And today we start, as usual, with volatility. This is the candles that volatility is closing today, and they're obviously bearish, and I would say quite a strong bearish. So this is the perspective for tomorrow. We will likely see volatility calming further. However, I'd like to say that these candles right now are sitting on the strong support lines, like 100 days moving average and 200 days moving average. So if in this case, we might see some bounce upward. And we remember that the weekly frame technically failed by several basis points and failed to confirm a top. So now we are watching for volatility. Technically, it is set for move lower. However, we don't know this yet, and we are yet to see a reversal candles. So the next one is dollar, and let's have a look here. So first of all, dollar is further confirming its double bottom, and it's already hit our first target that we discussed just before the weekend, March 21st. So the next target seems to be 105, and we would be expecting it in a couple of days. So speaking from the candles perspective, this is the daily frame. The candle today is closing with bullish candle, sitting comfortably above the support line. And if you look at the 2-day frame, which is also closing today, a very strong bullish continuation candle. Speaking about the monthly, we are watching it closely. A closure below 105.420 will mean bearish. But if dollar makes an effort and rallies about 1% from this level, it will be saved. Speaking about our long-term chart that's been in effect since November 2020, like 4.5 years ago, when we first produced it. So far, it is following the track, following the red path here. So if you can see the red path, it hit wave 3, and now potentially it is closing on this one. So that's our perspective, and that's what we are looking for. Now let's have a look at the current wave at the micro level. So what we are seeing here, first of all, is that this is the bottom here. The very first wave is clearly impulsive. Then we have a bounce back, pull back here, and another impulsive wave. So what we make some assumptions here and consider this as an impulse. So this would be something like this. So this would be wave 1 of a bigger impulse, and that's somewhere here. And this wave currently that is developing, it would be something like this. So this is wave 1, potentially 2, 3, and 4. And I'd like to change different patterns. So that's something that we might have in a couple of days before the end of the month. So this is March 30th. So if we look at if we try to put a channel here, this is something that we would be looking for. This is potentially the channel for this wave. So we might make some adjustments here. That would be our perspective wave. So let's see how it develops. Let's see how it develops. So these are, I placed the wave using the most typical Fibonacci levels for the waves like this. Let's see how it works. So far it is supported technically, and it is also supported by candles. So that's our perspective. And just imagine what the rally like this would make to the other asset classes. Now let's talk about TLT and bond market. Those who were with us on March 20 and listened to our daily market waves, when we said this candle quietly means get out. So this is what happened after the Thursday's candle, a strong belt hold. We have another candle, and now we have technically a confirmation of a reversal on the daily frame. And this candle today, I would say that it not only broke through the 8 and 20 EMA support lines, but it also moved below the 100 days moving average. So that's huge. And speaking about the 2-day frame, which is closing tomorrow, if TLT closes at this level or lower, with red candle anyway, so it will likely be a confirmation of a top on the 2-day frame. And I would say that this might also be a double top here if we look at this from that perspective. So that's another possibility, like just make it a bit more visible. Potential double top formation with the target approximately 87 or something, or lower. And we also track the monthly development of the monthly candle. So far the task is getting harder and harder for TLT. In order to close with a bullish candle by the end of the month on March 31st on Monday, now it needs to rally about 3%, which is a very challenging task at this point. So now if we look at the Elliott Wave formation, which we are tracking since March 7, no changes here so far. We are looking for either the red path here, 1, 2, 3, 4, 5, or the purple one with a chance of a larger correction. I would say that the most typical, if this is a purple path, the most typical target will be here, the most typical. However, the target also can move lower somewhere here. So this is, let's keep it wider just for better reference. And these targets, let me put the targets here. So it's 89.50, 86 with the most typical, I would say it's about 87.5. That would be the most typical target. All right, so that's all for TLT. Now let's have a look what the yields are telling us. This is the chart that we discussed in our weekly report, and I mentioned that while 10, 20, and 30 years yield formed very strong bullish candles, there's a very good chances to confirm them, to confirm the bottom on Monday. 5 and 2-year yields were somewhat behind, but now with today's candles, everything changed. Everything is looking bullish. And remember, this is the 2-day frame, and we were discussing a rising 3 methods. So there are still chances for it. 27 minutes to go. and right now it's sitting at 4.692. And in order to confirm this formation, rising three methods, it needs to close above 4.703. If it closes, well, that's almost a guaranteed pass upward. That's the perspective, and the chances for tomorrow higher high are very substantial, very significant, very high, because of the bullish engulfing on the 10-year and 20 and 30-year yield. Now let's move on to the 20-year yield chart that we discussed in our weekly report, March 21st. This is our perspective. So far, no surprises here. Potentially wave 1, an extended wave, an extended flat wave 2, and there is a chance for a super rally towards 4.8 or 5.1. That would be my preliminary targets right now. So let me put this one approximately. That's the perspective. Well, that's the target for wave 3. Now let's have a look at the bigger chart, and let's speculate a little bit here. So what I'm seeing here, this is the quarterly frame, and this is the chart that we are tracking since December 17, 2022. So technically 2.5 years. The chart remains unchanged. This is the proof. This is the chart that we shared then, and it is remaining the same. No changes whatsoever. So what I'm saying here is that this candle, this is a 3, let me make it bigger for you. So this is the quarterly candle that is closing in 7 days. So far, this candle is very similar to what we have here in April 2021, and maybe I'll circle it. So this one. If we assume that this candle would carry the same weight and the same structure that it was here, maybe we should expect a somewhat similar behavior for the rates for the next couple of quarters. The only thing I would like to say that this was a candle of a lower degree. So, and it had only 2 following up candles before we started to see rates higher. So in this case, I would say this is a different degree, higher degree. Maybe we can see 3, 4, even 5 candles. I'm talking about quarters. So like a horizontal move or slightly downward move before we are seeing the move higher. So that's the perspective. That's my assumption right now. But based on the candle rules and many other technical things. So that's the perspective. Just keep it in mind, and let's see how it closes the quarter. That would be a very interesting thing to watch. So that's the bonds department. Now let's move to our commodities, and we start with gold. Gold is closing today in 53 minutes, and so far this candle is bearish. However, it's not super bearish as I would expect it, but nevertheless, the daily frame was confirmed on Friday, the top of the daily frame. Now, what we are looking for the next move, and this would be the 3-day frame, which is closing tomorrow. If it is closing with a bearish engulfing, or to be precise, it's going to be an inside down candle, which is an equivalent, that would be a very strong formation. Let's see how it closes. So far, the odds on the short-term frames are bearish neutral. We need to see if the momentum builds tomorrow. Now, if we look at the Elliott Waves, this is the chart that we've been tracking since the middle of March. No surprises here. Gold potentially formed wave 3, fairly clean, and now it is forming wave 4, if it is wave 4. because I have some doubts here. So far, I would like to see another lower low before gold starts forming an impulse here. Why? Because this wave here is corrective, and we need to see a lower low before looking for an impulse. Let's see what happens in the next couple of days. And I would say that the 3-day candles and some technicals would be very critical at this moment. And this is a bigger picture that we discussed for a while. The important thing here is right now gold is at an inflection zone. So if it makes lower a move and moves below the 29,3441.3 before making higher high, it would be a serious technical damage from the Elliott Wave perspective. So it might confirm an ending diagonal with a price return toward this level 25.41. That's the perspective. And now we can have a look at the GLD trust. It's already closed. So the daily frame is somewhat bearish neutral at this point, and we need another moment, another few candles, another few days to see the momentum. And this is a very concerning closure. This is a 5-day candle which closed today just a few minutes ago, and this is potentially a belt hold, something that we discussed here. Remember this one, TLT, when I said get out? So this is a very similar one. Let's see how it develops in the next 5 days. So this is a 5-day candle, so we might need to be patient for this one. And from the monthly perspective, gold is so far is bullish. And if nothing changes in the next 5 days, I would say that this would be a bullish closure. However, if gold loses about 1.7, 1.8% and closes below the February high, I would treat it quite differently. That's the perspective for gold. Now let's have a quick look at silver. A very similar situation here. So the candle is closing today with a neutral, bearish, and the 5-day candle, which is closing tomorrow, it has the same risks that the one for gold. So a closure below the open of the green candle would be a very strong bearish message. Speaking about silver, I'm seeing this potential formation right now. Silver might form a leading diagonal downward, and this could be either wave 1 or wave A. And now it is forming, I think it's forming a bigger consolidation, bigger correction on A, B, C. Potentially would be either wave 2 or B. So far this wave has been corrective, and if it doesn't make a lower low here, I would be treating it as a corrective wave with the perspective for either blue path, lucky one, or the red one, which would be 1, 2, 3, 4, 5, somewhere down there. That's the perspective from Elliott Waves. And now if we look at SLV Trust, what we're seeing here is another concerning closure today. So the candle on the daily frame is neutral bearish. However, this is a very strong dark cloud cover on the 5-day. So it requires a confirmation, but if we get a confirmation in the next 5 days, precisely on March 31st, that would be quite a story. And the same for the weekly frame. Weekly closed with a bearish Harami candle. A closure below the low of the green candle would be a confirmation. That's all for silver. Now let's have a look at natural gas. So what is it saying to us? So first of all, I'd like to say that this candle is neither bearish nor bullish, but has a very good bullish perspective, very good one. And if we see a confirmation tomorrow, that could be a start of a rally. And I would like to say that on the weekly frame, we remember this epic failure when this natural gas failed to confirm a bearish move. So now we are looking for a green candle, potentially green candle this week. On the 2-day frame, the candle is bearish and we are looking for lower low. However, it doesn't mean that the next candle will be the red one. And speaking about the chart remains the same, nothing changed. I think that natural gas might be forming an ending diagonal here for wave 5 of C of 4, and this would be the target. So my ideal target is 3.895. However, plus minus. The main thing here is that natural gas shouldn't move below 3.778. Otherwise, it will break not only this impulsive structure, but also a structure on the larger frames, which were discussed in detail in our weekly report. You can find them at our investingangles.com website. So that's all for commodities. And now let's have a look at the US indices. First of all, I'd like to say that the closure today was quite bullish, and all candles all made very strong moves, green ones, and S&P 500 moved above 200 days moving average, which is a very strong move. If it is confirmed in the next day or two, it might set a new direction. So the same happened for Dow Jones. Nasdaq is lagging behind, and this is indeed a concern because usually Nasdaq is the first one to cross the line, and Russell is somewhat the same. And speaking about Russell, I would like to emphasize this particular formation. This is a fairly rare 50 over 200 days moving average bearish, or some call it death cross. And it's not quite clear what the role of it, whether it's just a desperation one and the final, or it's just a leading indicator. We need to see a few more days and maybe even a few more weeks to see how it develops. Speaking about the bigger candle closure today, that's quite a game changer. So first of all, and I'd like to focus on S&P 500 and Nasdaq. Let's start with Nasdaq. So these are 3 black crows, and the only counter move is just 2 small green candles. So now technically Nasdaq might be forming a falling 3 methods, and in order to do this, it would need to form another green candle, maybe over 5 days, maybe a smaller one, or just to move down here. Let's see how it develops. So the next 5 day, and this is the target. So let me measure it. So it's 503.74. 503.74. If it closes above this line, that would be a confirmation of bottom on the 5-day frame. However, a failure would be a bearish signal and a very strong one, potentially forming a falling 3 methods with a move right here. That's the perspective. Absolutely the same formation for S&P 500. Here's the line, and the line is 585.39. Let me put it 585.39. That's the perspective. That's the target. So if S&P 500 doesn't cross this line doesn't close above this line on March 31st, it means that it is going down, possibly very strongly. So somewhat similar formations are for Dow Jones and Russell. They may be in slightly better position, speaking about their candle formations, but we will see how they deploy here, how they develop. So far, none of them confirmed a reversal on this frame. Now let's have a look at the bigger chart. So this is S&P 500. What we are seeing here is that I would say that this wave is a bit too large for wave 4, and right now it's of a lower probability at the moment. What I would be looking for, wave A, B, C, a bigger wave B after wave A. And at this point, this A wave can be broken into an ABC or 1, 2, 3. So the formation is quite complex. So I'd like to keep it for an A for now. That's the perspective. Once we are seeing it here, we might see another move down. And I would like to emphasize that this wave is technically corrective one, the very first wave of the bottom. Now, if we look at, let's have a look at Nasdaq at the same time. So this is a bit clearer compared to S&P 500. So we are seeing here either an ABC similar. However, it could be a purple path with a wave 1, 2, 3, 4, 5, an impulse here, which is also nicely breaks into impulsive waves. And we are seeing here this a clear corrective wave, much clearer compared to S&P 500 or the other indices. When Nasdaq forms a corrective wave upward, this is a big concern. I think that if it is resolved either here, like the purple path, or makes one more higher high before making a strong move down. The key here is timing. So if it holds here and moves higher, then from the candle's perspective, it wouldn't be as as lot of harm as compared to when it resolves before the end of the month. Let's see how it develops, and this would be a very crucial point. We will discuss it in our daily and weekly reports on a regular basis. And the blue path right now is of lower probability, so either purple or the red one. Now I would like to evaluate the sectors. What we are seeing here is technically all sectors but utilities are bullish, closed with bullish candles, and have much better chances to continue tomorrow, to continue upwards tomorrow. And speaking about larger stocks, so this is the perspective. The only thing that is kind of concerning is Microsoft, and Berkshire is not quite bullish at this moment. The other ones formed bullish candles with fair chances to move higher. Apple is neutral. Apple is neutral. This could be a spinning top doji, but we would need to see a confirmation for this candle. That's the perspective, and the final cherry on the cake, like I said, today we will discuss Tesla. That's our call on Tesla that we made on January 21st, and this was the original one, and we said that Tesla is going to land somewhere between 200 and 260. This is exactly what it did, and the lowest point was 222 and 28. Oh, 217. So just closer to the lower target. Now let's have a look at what we should expect from Tesla. So let's have a look at the daily frame. The daily looks very bullish at the moment. However, it is still below the 200 days moving average, and we have a freshly made 50 by 100 daily moving average bearish cross. On the 5-day frame, Tesla failed to form a bottom. It could be significant, but in order to continue the momentum, it needs to move higher right now. And the next candle must be closed much higher. Speaking about the monthly, there are so many potential formations here, so I don't even want to discuss it, but I'd like to talk about this one. So this is the 2-hour frame. 2-hour frame, and right now it is grossly overbought. And it's how much? It's 85, 86, technically 86. If we look at the timeline, what we are seeing that we have 1, 2, 3 similar formations here when Tesla went way too high. This is RSI, to our RSI. It went way too high, and so I think this is aligned with these three. So what happened after it reached this high RSI? So let's measure. This was down 12%. This was down 17%, and this was down, well, a lot. It was down 23%. So you get my drift. So this is, Tesla would be looking for some, let's say on average, like 15% decline here. Maybe it might go a little higher, but I would be very cautious about getting long here. That's the perspective from technicals, and as you can see, only the daily frame shows that Tesla has some potential to move higher. The bigger frame, like 2-day and 3-day, they are not closed yet, but the 5-day failed to make a bottom. So we have to be very cautious about it. And speaking about the Elliott wave formation, this is what we are seeing here. This is our call on January 21st, when we said that Tesla is about to go down, when it was 420. And right now, I would be looking for potentially wave A, B, and C here. However, 1, 2, 3, 4 is also on the table right now. First of all, because this wave, the very first wave of the bottom, has been corrective, and now we might see a closure of this wave, completion of an impulse, maybe slightly higher here, and then we will get Tesla to move down. And we discussed about 15% from this level, so let's try to measure. So about 15%, it would be somewhere here, but it might be lower. That's a very ballpark estimate at this moment. And this is our initial chart that was discussed with our subscribers on January 11th. That's what we said, and this is what we got. And the chart was inspired by this particular formation that is discussed in Brechter's book about Elliott Waves. It is highly recommended if you're looking for fundamentals, for something to start. This is extremely important and well-written book. Well, just to summarize, from volatility's cool down to the dollar's quiet strength, from bonds behaving to Tesla technical turbulence, today's episode was full of signals, each with weight and direction. At Investing Angles, we analyze every candle, every cross, every count with unmatched precision. What's your take on today's bounce? A turning point or a trap? Drop your thoughts in the comments. Smash that like, subscribe, and ring the bell so you never miss the next move. And once again, thank you. We are closing in on 10,000 subscribers thanks to your continued trust and engagement. Dive deeper at investingangles.com, where even a free reader plan unlocks powerful insights. Stay sharp, trade smart, and as always, happy trading.